class, welcome back to our online lecture class for PAD370, which is the Introduction to Public Financial Administration. This week we are going to learn about public accounting, in which we have already reached to topic 6 of the semester. So without wasting too much time of yours, let us start now. Today's topic is a very short one, because I'm going to give you a lot of tasks and also discussion. Alright, before we proceed, as usual, we are going to look at the syllabus content for today's topic, which is the public accounting. So, first of all, we are going to look at the definition. This is usual things, Definition and importance of accounting, followed by the principles of public accounting, and then types of public accounting, management of trust and deposit accounts, accounting system structures, and also role of the accountant general. We move on to the definition first. So what is actually accounting? So the term accounting is used to describe the process of assembling, analyzing, classifying, and also recording data that is relevant to transactions and events affecting the government's finances. So this is according to Michael Genito in 2013. So if you see, based on the term, there are a few keywords here which you can memorize for a better understanding of what is public accounting. So just remember the word assembling, analyzing, and also classifying and recording data, and it is also related to transactions and events affecting government's finances. So I hope you are very clear of that term. Next one, accounting is the process of recording of financial transactions. Again, you can see the word recording there and also transactions, along with storing, sorting, retrieving, summarizing, and presenting the results in various reports and analysis. So this is according to Harold Abercamp in 2019. One part of accounting focuses on presenting the financial information in the form of general purpose financial statements, for example, balance sheet, income statement, and act, that are distributed to people outside of the company. These external reports must be prepared in accordance with generally accepted accounting principles. We're going to look at the principles later on. Another part of accounting focuses on providing a government's management with the information needed to keep the economy financially healthy. Although some of the information comes from recorded transactions, many of the analysis and reports include estimated and projected amounts based on various assumptions. A few examples of this information are budgets, standards of controlling operations, and estimating selling prices when quoting prices for new work. So all of these are the definitions of accounting. Very easy one, Next one, the importance of accounting. Usually, before we start talking a lot about a topic, we usually look at what are the importance of this thing to the public, to the government. So these are all the important things of accounting. So what are the purposes actually? So importance also can be seen as the purposes of accounting. So accounting helps in decision making, planning, and controlling processes. It's with the help of accounting there will be documents which will be factored in carrying out these processes. Again, with these methodical documents, they help in reduction of theft and frauds. So the first importance is related to planning budget. So what is the explanation for planning budget? Budgeting is a core factor in every government. Planning budgets help government to make strategies, save money, and noticing any expenditure exceeding the budgeted amount. To make a budget, you need various previous records. In order for these documents to be available, they must be very well maintained through accounting, since they are the basis of planning and making budgets. Yeah. So this is very common, yeah, planning budget. And then second one, banks and lenders. In order to get any loan from financial institution, you must be able to present your financial status in acceptable order. So in order to make it, you need to have a proper accounting system so as to present various books of records, such as profits recorded, assets and liabilities, taxes paid, among others. Financial institutions will scrutinize them carefully before lending to a decision of awarding a loan. This is just like when you are applying for a job, yeah? Okay, in terms of applying for a job, you need to show your resume, your CV, in order to show them what is your capability of doing things, or what are your skills, and then the things that you are good at and your experiences. This is the same with this one, the importance of accounting. So in order for you to apply for a loan from banks and lenders, you need to have the account, yeah, the account showing all the profits and everything that they need to know about your accounting system. Okay, so the third importance is to keep a record about your accounting system, or keeping records. Yeah, every government needs to keep records and act upon them in order to run smoothly. In this case, accounting plays a big role in keeping records. All records are collected, organized, and interpreted in order to be communicated to the end users, therefore helping in making an economically viable decision which will lead to the positive productivity of the government economy. Remember, yeah, planning budget, banks and lenders, and also keeping records. Alright class, the fourth importance of accounting is decision making, yeah. It helps in doing the decision making. Any economic or any decision is made depending on the financial statement of the government. A financial statement is as a result of accounting. Without proper accounting, the executives can't make a sounding decision, since they will be operating in blindness, hence making it impossible to achieve government objectives. This is very straightforward, yeah? And then the next one, information to investors. Financial statements and accounts are used to represent the government's financial condition to the stakeholders, such as debtors, creditors, and investors. Many investors will run away if you lack financial records and accounts to present, so as they can know the business progress. So this is the same application with the one that I explained when you apply for a job. So when you apply for a job, you need to provide your resume or CV, just like how you want to apply for a loan from the bank just now. This is the same application, yeah, to investors as well. The next one, reporting tools. Every agency must maintain accounting systems so as they can ascertain what they are making on their financial transactions. This also enables them to make the decision on the progress of the financial productivity. And then last but not least, as a managing and monitoring cash flow. Okay, as a managing and monitoring cash flow tool, yeah. Proper accounting system will take care of working capital and any other cash requirements within the organization. So that is straightforward, yeah. Alright class, the fourth importance of accounting is decision making, yeah. It helps in doing the decision making. Any economic or any decision is made depending on the financial statement of the government. A financial statement is as a result of accounting. Without proper accounting, the executives can't make a sounding decision, since they will be operating in blindness, hence making it impossible to achieve government objectives. This is very straightforward, yeah? And then the next one, information to investors. Financial statements and accounts are used to represent the government's financial condition to the stakeholders, such as debtors, creditors, and investors. Many investors will run away if you lack financial records and accounts to present so as they can know the business progress. So this is the same application with the one that I explained when you apply for a job. So when you apply for a job, you need to provide your resume or CV, just like how you want to apply for a loan from the bank just now. This is the same application, yeah, to investors as well. The next one, reporting tools. Every agency must maintain accounting systems so as they can ascertain what they are making on their financial transactions. This also enables them to make the decision on the progress of the financial productivity. And then last but not least, as a managing and monitoring cash flow. Okay, as a managing and monitoring cash flow tool, yeah, proper accounting system will take care of working capital and any other cash requirements within the organization. So that is straightforward, yeah. Okay, next one is about the principles of public accounting. So you already know that principles related to a set of rules or regulations related to something. So principles of public accounting means that public accounting exerts certain regulations that they must follow, yeah. So the first one is legality. It complies to rules and regulations. This is very common, yeah. And then maintenance or keeping update the transactions. It involves proper filing in accounting system. And then the third one, stewardship, specific authority, in example, giving it to the parliament, yeah, because parliament has the highest authority to control over the public accounting system. And then accountability, also responsibility and honesty. It also involves transparency. So if you can see here, everything related to public accounting has also mentioned or touched on the moral values, yeah, just like accountability, responsibility, honesty, and also transparency. Next one, main types of public accounting methods. So I have prepared a sample video also explaining on what is exactly cash accounting and also what is accrual accounting, followed by hybrid accounting, yeah. So in a simple understanding, cash accounting related to or involves revenues recorded when money received, purchases recorded when payment made, government department or ministries is the one that handle the cash accounting system, yeah. And then accrual accounting, expenditure recorded based on when the order is received and revenue when it is supposed to be received, purchase recorded on purchase order. So accrual accounting is involving the PO, yeah, purchase order. And then it is controlled by private or statutory bodies. How about hybrid accounting? Okay, looking at the term itself, you already know hybrid is a combination of both, yeah. A combination of both accrual and cash basis accounting according to the operations. Okay, so I hope that you guys understand, yeah, the simple understanding of cash accounting, accrual accounting, and also hybrid accounting.
Today we're going to cover another topic that's often a reason for confusion: cash and accrual accounting. Two very different accounting methods. In this video, we're going to take a look at both and see how each one could affect a business in different ways. We'll also see why income and cash can be two very different things. Lots to cover. Let's get started. The difference between these two concepts is in the timing of when revenue and expenses are recorded in your accounts. So just to be clear, over time, both systems will get to the same results. But at a certain point in time, there may be differences. And that's something that's important to understand, especially when it comes to analysis of financial statements. Let's start with the easier part, cash accounting. Cash-based accounting is a very intuitive system. It recognizes transactions only when cash is actually exchanged. So revenue is reported on the income statement only when cash is received, and expenses are only recorded when cash leaves your account. So under this method, it doesn't matter in which month you did the work for your client or you sent an invoice to your customer. The only thing that matters is when they actually paid you. Same thing for expenses. Even when you purchase all kinds of stuff on credit for your business, it won't show in your income statement until you pay for it. So this can be your accounting method of choice because, well, one, it's intuitive and it's simple to understand. Two is that as a business owner, cash is the most important topic to be on top of, and cash accounting helps you do that. Number three, you might even be able to do your own bookkeeping in Excel, meaning it's much cheaper than having to pay for specialized accounting software or for someone to do the bookkeeping for you. Number four, it's an accepted accounting method in most countries, also for tax purposes. The rules vary by country, but generally cash accounting can be applied if the business stays below a certain revenue threshold or it doesn't maintain a lot of inventory. So it's a great option for small, simple, and mainly cash-based businesses. An accrual accounting system, on the other hand, is based on when the transaction happens rather than when cash changes hands. In other words, revenue is reported when it's earned, and expenses are recorded when they are incurred. So, for example, if your company sells goods in January but isn't paid until February, then the revenue isn't recorded until February under the cash accounting method. But it would be reported in January under the accrual accounting method. Let's better understand the difference between cash and accrual accounting, especially because it seems cash accounting is much easier. Why do we even need accrual accounting? Let's try to answer that. Remember Claudio and his Italian beach business? Like any other day, Claudio today goes to his trusted manufacturer of tourist souvenirs to buy his supply of plates. This time, though, the manufacturer tells Claudio that he wants to optimize his processes and he wants to avoid the daily cash transactions. He would like to bring out the cash register only just once per week, and because Claudio has been a great customer for him, he'd be willing to give him credit. So they agree to settle the purchases for the week, always on Fridays. But for Claudio, this is a great deal because he doesn't have to pay right away. He's working with somebody else's money. This way, he can even expand his souvenir business and buy another item to sell from another manufacturer with his initial 100 euros. In business, we call this the leverage effect. So Claudio decides to go ahead with this idea and invests his 100 euros in another item and buys 50 hats in cash. He pays 2 euros for each hat and plans to sell them for 10 euros to the tourists. Now at the beach, he has 100 plates and 50 hats to sell. His friend, let's call him Mario, comes along and sees the new hats Claudio is selling, and he really likes them. He tells Claudio that he wants to buy 30 hats for this event he's going to in the evening, but he can only pay for them tomorrow after he sold them at the event. Claudio agrees and hands over the 30 hats to Mario. He stays at the beach and sells the rest of his souvenirs and then goes home. He counts the money in his pocket as usual, and it turns out to be 700 euros. He deducts his initial investment of 100 euros that he left the house with, and this gets him to a profit of 600 euros. Is this correct? The answer is, it depends. It depends if Claudio is applying the cash accounting method or accrual accounting. As we've learned, the difference between the two lies in the timing of when sales and purchases are recorded in your accounts. So let's apply cash accounting to create Claudio's income statement. His revenue consists of the 20 hats and 100 plates he sold at the beach. The 30 hats for Mario are not accounted for because he didn't get paid for it yet. Likewise, for his expenses, only the 100 euros for the hats are recorded because the plates he didn't pay for. Basically, this gives us exactly the profit Claudio is calculating by using his usual method of counting the cash in his pocket. And really, this is what it is. Only transactions that have an impact on cash are considered. And we can already see the problem with that. It doesn't provide a complete picture of what happened during the day. In reality, he sold all of his inventory, but in the income statement, we don't see the full revenue. Another problem is that we show revenue for the 100 plates, but no corresponding cost of the goods sold. In other words, the costs don't follow the revenue, which can present quite a misleading picture of the company's profitability. Now, let's take a look at accrual accounting. With this method, revenue is considered when earned. But what does that mean exactly? This can be quite a complicated topic, but in a nutshell, revenue is earned when the products were delivered to the customer or services were provided. And it's reasonable to expect that cash will be received from the customer. The recognition of expenses follows the matching principle, which means that they are recognized in the period in which the related revenue is recognized. Let's see how that looks like for Claudio. His revenue will include all products he sold during the day, meaning also the revenue for the 30 hats he sold to Mario and didn't receive cash for. Why? Because he handed over the hats, he fulfilled his part of the deal. And Claudio doesn't have any reason to expect Mario is not going to pay him. Therefore, Claudio's revenue is 300 euros higher than under the cash accounting. What about his costs? By applying the matching principle, the expenses should be recognized in the same period as the revenues they help to generate. Therefore, we need to report the cost of goods sold for the entire revenue, which results in COGS of 200. This way, the income statement reports revenue of 1,000 and a net profit of 800 for the day. Quite different than what we would report under cash accounting. In addition, in the balance sheet, we would have to report accounts receivable, the 300 euros Mario still owes Claudio, and accounts payable, the 100 euros Claudio owes the manufacturer of the plates. Both methods have their advantages and disadvantages. The cash accounting method provides an accurate picture of how much cash a business has. It's simple to apply, and since the transactions aren't recorded until the cash is received or paid, the income of the business is not taxed until it's in the bank. On the other hand, it doesn't provide a full picture, and because it doesn't report receivables or payables, it doesn't show outstanding invoices that haven't been paid yet. The accrual method, on the other hand, gives a more accurate picture of the business. If the company has to report under GAAP or IFRS, then that's the accepted method. But it means more complex processes in accounting. And its purpose is not to track cash flow. So the key point here is that reported income and cash can be two very different things. Therefore, under accrual accounting, don't just look at the income statement or the balance sheet. Focus on the cash flow statement as well to see if the business is able to generate cash, which is the lifeblood of any business. I hope this video was helpful for you to get familiar with these two accounting methods. If you enjoyed this video, give it a thumbs up, and if you want to improve your skills, consider subscribing. And don't forget to hit that bell so you don't miss any videos we put out here. Thank you for watching. See you in the next video.
Okay, now we move on to the in details explanation of each type of public accounting. So cash accounting. In cash basis accounting, it involves process of record expenses in financial accounts when the cash is actually laid out, and they book revenue when they actually hold the cash in their hot little hands, or more likely in a bank account. For example, if a painter completed a project on December 30, 2018, but does not get paid for it until the owner inspects it on January 10, 2019, the painter reports those cash earnings on her 2019 tax report. In cash basis accounting, cash earnings include checks, credit card receipts, or any other form of revenue from customers. This method matters because expenses and revenues aren't carefully matched on a month-to-month basis. Expenses aren't recognized until the money is actually paid out, even if the expenses are incurred in previous months, and revenues earned in the previous months aren't recognized until the cash is actually received. However, cash basis accounting excels in tracking the actual cash available. So this is the pro of cash accounting. Yeah? Okay. How about accrual accounting? It records revenue when the actual transaction is completed, such as the completion of work specified in a contract agreement between the company and its customer, not when it receives the cash. Yeah? That is, the company records revenue when it earns it, even if the customer hasn't paid yet. For example, a carpentry contractor who uses accrual accounting records the revenue earned when he completes the job, even if the customer hasn't paid the final bill yet. Expenses are handled in the same way. The company records any expenses when they are incurred, even if it hasn't paid for the supplies yet. For example, when a carpenter buys lumber for a job, he may very likely to do so on account and not actually lay out the cash for the lumber until a month or so later when he gets the bill. Expenses and revenue are matched, providing a company with a better idea of how much it's spending to operate each month and how much profit it's making. Expenses are recorded for accrued in the month incurred, even if the cash isn't paid out until the next month. Revenues are recorded in the month the project is complete or the product is shipped, even if the company hasn't yet received the cash from the customer. So for hybrid accounting methods usually combine aspects from both accrual and cash basis accounting according to company operations. Hybrid accounting benefits companies by allowing them to record sales transactions as they occur, which makes trending or forecasting estimates for future accounting periods more accurate. Under a hybrid accounting method, companies will use the accrual accounting method to satisfy tax requirements and the cash basis method for all other financial transactions. Accounts receivable and accounts payable are the only items recorded using the accrual methods. As examples, transactions relate to inventory. Financial transactions are like asset purchases, payroll or equity investments are recorded using the cash method, reflecting transactions where cash changes hands. Next one, management of trust and deposit accounts. I want you to read this on your own. Yeah? This is factual. And then accounting system structure. So please bear in mind that Malaysian applies two kind of system structure in public accounting. The first one is the self-accounting system department called SAD or SAT, and non-self-accounting system department or called NSAT. You just have to add on another and in front of set, yeah. So the first one is set and the second one is and set. Okay, as easy as that one. So what is self-accounting system department or set? Okay, the amounts entrusted to them by the treasury, yeah, they are provided with banking facilities and their receipts and payments are made through their own bank accounts. So the self system is they have their own accounts, yeah, the companies, where all ministries and departments send their vouchers to the treasury for examination and payment. Some big ministries are given the autonomy for examination and payment at their level. All the vouchers of a self-accounting department are kept at its custody. Self-accounting department will also have to maintain their own cash books and prepare bank reconciliation statements, yeah? How about non-self-accounting system department or NSAT? So everything is controlled by the treasury, yeah? So bear in mind that. Non-autonomy in payment allocation of expenditures. Accounting managed by treasury. All payment made via the treasury. So this is the most I think this is the main point, yeah, that differentiate between SAT and also NSAT. Okay, in which NSAT is fully controlled by the treasury. Meanwhile for SAT, it has its own department, yeah, accounting department. How about the roles of accountant general? Okay, so there are 5 provided roles in here. The first one is to enhance accountability and transparency in federal government accounting and financial management by performing regular checks and supervision. Secondly, to enhance accounting and financial management system for all government agencies. Thirdly, to assist government in making effective decisions. Fourthly, to develop and implement human resource management system for the accounting system. And then fifthly, to report to Secretary General of Treasury on any irregularities in public accounting system. So that's all for today, yeah, guys. So as usual, please stay safe and